Hi, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 18th of August. All right, now just a bit of a quick recap. There's some odd things sort of going around that you need to be sort of abreast of. The US retail sales figures are much worse than expected, right? That did not see the dollar fall. In fact, the dollar rallied, and it's where the geopolitical situation comes back into play, and you're just going to be abreast. This could happen at any stage, but I'm a little bit miffed at the what they put it down to. It's like the Afghanistan situation blowing up, and also the Delta variant of the COVID sort of coming back into play. So it's almost like they're clutching at straws, but that level of uncertainty around what's going on in Afghanistan, what that means for the US dollar, and the COVID situation around the place, it became a risk-off situation. Okay, so what that means is equity markets sell off. Whoops, I've got the wrong thing on there. These things go lower. The dollar block falls, euro, sterling, Aussie, Kiwi, and the dollar rallies, right? That's what happened yesterday. And if I just give you a quick look at the charts, you can see that very clear, right? And this is the hard part is the dollar move here, the dollar index. I've got to sort of fan out dollar Swiss, but the dollar rallied across the board. It's much more evident on the dollar block. I've got those charts a little bit more extended out so you can see the width of the move. And that's one of those left field events that you can't plan for. You'd think with a weak retail sales figures out of the US, the dollar would rally, but it's not exactly dollar would fall, but it's not how it played out. It was completely the opposite. So with that in mind, you've got to come back and take things with a grain of salt, like what's going on with the data. Now, let me just tell you what's just been going on here. The Aussie wage price data missed the mark from the forecasts. That was sort of by the by. The big thing here is the cash rate in New Zealand. The RBNZ today, there was some release yesterday of some COVID outbreaks in New Zealand. That sort of escalated the panic, so to speak. And the RBNZ was expected to raise rates to 0.5%. They left them unchanged. Now, this was largely predicted yesterday because once the pandemic news came out, the currency sort of factored in the fact that the RBNZ wouldn't be doing anything with rates straight away, right? Now, we've just had the release. Just before the release, the Kiwi's around 69.18. They got up to 69.40 with about 3 or 4 minutes before the release. They came out, they didn't change rates. It sort of gapped down to about 75.80, messed around here. It's touched a low of 68, and now it's exactly back where it was, right? The comments from the RBNZ were their plan was intact. They were going to have higher rates by December, first quarter next year, second quarter, third quarter, etc. So there's no change in plan. The only thing they didn't do is raise rates because of the uncertainty around the pandemic just at the moment, right? So that's sent a bit of a shockwave through the markets. Actually, let me just bring back the Kiwi markets. So if you have a look at the currencies, right, the devil's in the detail, and that's from the comments from the central bank, but wild price action across the board, good 100-point moves here. That's all said and done. It's all buried. You had to be quick. It's the quick and the dead, right? Even if you were short Kiwi, you probably wouldn't have felt comfortable, especially if you had have seen the comments from the RBNZ, who were basically reiterating the plan is to keep raising rates from here, right? So anyway, we're back to where it was. It looked like a bit of a storm in a teacup. And that's what you get with these central bank releases, where there's uncertainty around what's going to happen, especially when they start commenting. I think they came out and commented that they were what their plan was to sort of really refocus the market again on what's happening. Now, that's all it's come and gone, right? So now what we have to do is sort of try and work out where things go from here. Well, the markets are lively, very lively. We got the UK CPI data today. It's one of the important numbers. I know the Bank of England isn't exactly got their finger on the go button, but it's worth having a look at. Keep an eye on the US housing starts and also the inflation numbers out of Canada. Now, the Canadian inflation numbers are much more important than the UK ones, and that's primarily because the Bank of Canada has been talking about forward guidance, what their plan is going forward. It's about raising interest rates sooner than later. So the CPI numbers in the Canada will have a bigger impact than the ones on the UK, right? We need the Bank of England to chime in and tell us what their plan is. That's when those inflation numbers in the UK come of interest to us. So make sure you don't get too carried away with the UK. Really focus on the Canadian CPI numbers. So that's where we are. Now, the other part of this is, and if you've been trading for the last year or two, it's all about the geopolitical situation. So what we're looking for is the markets to snap out of that, snap out of this pandemic / Afghanistan issue and come back to normal market conditions where we are focusing on the data. Now, how can you tell that? Well, if there's no change in the news, keep an eye on the equity markets, right? If they all go red, that risk-off scenario is going to still be in play. We should see the dollar rally across the board, right? And the dollar block fall. Now, don't get deterred here or confused. I know the dollar pairs here are red, right? They're going down, and the other pairs are going up. This is just the normal cycle, right? So during the market where the activity was, yeah, the dollar rallies. But outside of that, when that North American session goes to sleep, the markets sort of have a bit of a counter rally. And then once we get into the European North American session again, that move will continue if the news is the same, right? So don't think, hang on, the dollar's going down now. No, this is just a normal cycle of data. Now, the only other thing that you can keep an eye on to see if this is really happening, keep an eye on the US equity futures, right? At the moment, they're slightly up. So keep an eye on that. That's positive. You know, it should be the US dollar a little bit lower and the dollar block higher. That's exactly what's happening here during the Asian session, right? So the key to this, a risk-on, risk-off scenario around geopolitical issues is the equity markets. And I'm talking about the North American equity markets more so than anything else, right? So just keep an eye on that. It's important to focus on. Outside of that, I mean, there are things happening. As I just explained, the Kiwi has just had a massive day and a half. Like this price action here is a bloodbath. Don't think there's much cash in that situation that we've just come through, but the pairs are starting to roll to the downside, right? The dollar block, the dollar pairs haven't exactly sort of taken off just yet. If I wind that out, we should get a bit more of a view there of what's going on dollar Swiss, that sort of bounce back up. Dollar yen slightly squeaking. And as oil falls, dollar CAD is coming back to a more of a relative value. Now, one of the things that you can be doing at this point, let me just change screens again, is to come back to your daily charts, and something that I probably haven't spoken about a lot, but it's probably time to sort of include, is having a look at the overall, you know, what's the definition of these currencies going up or down? Well, it comes back to your longer term charts. You can look at the trend lines on the longer term charts, but what we're really looking at is the bull bear line, right? A lot of the hedge funds, just about all of them, use this to measure whether instruments are going up or going down. Now, what we're talking about is, let me just change my screen. Okay, some of these charts are still loading. What we're talking about is, it's a sort of basic definition. If a currency, here's the 200-day simple moving average, right? Exponential moving average. Now, that gives you the line. So if the dollar index, which is what I'm on here, is below this line, it would be considered as bearish. If it moves above the trend, above this moving average, the bull bear line, it's considered to be bullish, right? And the dollar index is very close to exploding through that, right? Now, if you have a look through the pairs here, are these pairs going up or down? Well, at the moment, dollar CAD is moving higher, but it's not considered as bullish yet. Hasn't gone above the line. Dollar yen's above the bull bear line. Dollar Swiss, it's got a bit of work to do, but there's a couple of key pairs here where it is in play, right? Kiwi's right at the level, Aussie and Euro, right? So keep an eye on these pairs. If it goes below these, this is where the bigger fund managers will liquidate if they've been long those core pairs, or if the plan is to go short, this is where they trigger entry levels going short as it goes through that sort of bull bear line. So just bear that in mind. There's some active opportunities right now with the geopolitical issue just sort of developing. I think there's a big chance for the dollar to surge. It's sort of in line with the fundamentals. I know CPI month on month was not as strong last month, but everything else has been pretty good in the US. Throw this level of uncertainty around global growth, China sales have been dropping off, which is a big risk issue for global growth. Means the global economy is not buying their stuff. And we've got situations here where Euro is at a great point, tipping point. Aussie's at a tipping point, if not already gone through it. Kiwi's almost at a tipping point, and the dollar index, right? So keep an eye on these pairs. These are ones that are going to be in focus as things develop, right? So ideally, if you had a trend line at those levels, it'd be also awesome. Whereas when you look at other pairs here, like dollar CAD, it's got a bit of work to do. Dollar yen's well above, and actually dollar Swiss has got a fair bit of work to do to break its sort of core bull bear line, right? This is something to keep you abreast of what's happening in the big picture. What are the big players doing? What are they looking at? Well, it's the same sort of thing. All right, and that's pretty much where we are, guys. So coming up, CPI data out of the UK, some inflation figures there out of the Europe. They're not the best ones. Housing start numbers out of the US, and more importantly, the Canadian CPI data, right? This is a big one. You get weak CPI here. The dollar CAD is rallying at the moment. It'll shoot up. That's the direction it wants to go. So weak CPI, easy trade to the top side. That's my tip. All the best, guys. Cheerio.